Good day, grade 12s. We want to continue with the VAT calculations. I will send a PDF with notes. This one is only on calculations. Remember, this is a grade 11 topic. Most of the content you have covered, including the definition of concepts, reasons why we do VAT, and the advantages of registering as a VAT vendor. Now, when we are doing VAT calculations, most questions require us to calculate amount payable to SARS or receivable from SARS. But for you to do this, you need to understand some basic definitions. The first one is amount payable to SARS. Input tax, output tax, and invoice base. Now, what is VAT input or input tax? This is VAT paid by a business when they buy goods and services. We can also define it as VAT. The word paid is crucial in the definition. VAT input is claimed back from SARS. This is one advantage of a business being registered to collect. The advantage is VAT input will be refunded back from SARS. Now, any transaction that increases the input tax or has the effect of decreasing amount payable to SARS. What is VAT output or output tax? This is VAT received by a business from customers when they sell goods and services. We can also say VAT on sales. The word received is crucial because it is payable to SARS. Let me reiterate from the beginning that a business is not allowed to benefit from the collection of VAT. It is also not allowed to suffer a loss from the collection of VAT. It is merely an agent for the government. So everything that is collected must be SARS. Then the input will be claimed back. So the formula to calculate amount payable or receivable to SARS is equal to total output tax minus total input tax. Also, any transaction that increases output tax has the effect of increasing amount to be paid over to SARS. What is an invoice base? When you are registered to collect VAT, you are registering into two forms of collection. We have an invoice base and a receipt base, but the default setting is the invoice base. It means VAT is payable when the invoice is issued. There are transactions where we sell on credit. We calculate VAT on that credit transaction. Whether we are going to receive money or not, VAT would have been calculated. VAT calculations. The business, like I said, is not required to benefit or to make a loss out of VAT transactions. Now, because of the invoice-based method, For accuracy of some transactions need to be taken into account when calculating amount payable or receivable. I have recalled these transactions problem transactions. These are the reasons why we need to adjust. If there were only sales and purchases, there were no need to calculate, because we know everything that we have sold, it is output tax. Everything that we have bought, it is input. But there are some transactions which result in adjustments to be made. Otherwise, we should not make a loss out of VAT transactions. Transactions affecting output tax. We have debtors allowance, bad debts, discount allowed, discount on dishonored checks reversed, bad debts recovered. These transactions will affect output tax, how much we must pay over, because we will not receive everything from the debtor. Already we will have calculated our VAT using the first transaction when we sold on credit. But these transactions, debtor's allowance will then decrease that tax, the VAT in bad debts, the VAT in discount allowed. These three transactions will decrease the amount we should pay over to SARS. Then discount on dishonored check reversed and bad debts recovered will increase what we should pay over to SARS, because we would have decreased it initially. Now we need to reinstate the data. Transactions affecting input tax paid. We have creditors allowance, discount allowed, discount received, and drawings. These ones have the effect of decreasing what we must claim back from SARS. Creditors allowance, it is what we have returned to the supplier. We are not going to pay VAT for those items. Discount received is what the supplier decided to allow us not to pay. We are not going to pay VAT for the discount. Then drawings, what we have used personally as the business owners, we cannot claim it from SARS. So these transactions decreases what we must claim from SARS. So when we are dealing with the VAT, these are the adjustments to look for. They are the reasons why we will get it wrong or right. So you need to get them right from the start. I have summarized now all the transactions affecting our debtors or affecting output tax, and the transactions affecting input tax. You need to master this. Amount owed to SARS, this is the opening balance. It increases output. Credit sales from the debtors journal increases output tax. Cash sales from the CRJ, it increases output. Debtors allowance, DAJ, it decreases. Receipts from debtors. When a customer pay his account, we do not calculate yet once again VAT, because it was already calculated using the invoice base when we bought in our second transaction on credit. When a customer bought in credit from our first transaction, that's when we have calculated. So when a customer is now paying, we do not calculate again VAT, only discount allowed. The VAT in the discount will decrease. Bad debts recovered will increase VAT output. Bad debts written off will decrease. Then discount on unpaid or RD checks or dishonored checks reversed, it increases. For input tax, amount owed by SARS, it increases input. Credit purchases from the creditors journal increases input. Cash purchases from the CPJ increases input. What we have paid, creditors allowance CAJ decreases. Payments to creditors like receipts from debtors, we do not calculate VAT on the payments. The reason is we had used invoice based credit purchases. We've already calculated. When we are now paying our account, we do not decrease. We do not calculate VAT for the second time. We only calculate VAT in the discount received, which will decrease amount claimed back, and drawings of stock decreases input tax. I am indicating the journals because some questions they will give you a journal. So whenever you see debtors journal CRJ, you need to know the type of tax involved. Is it output or input? Then amount owed to, it means we are owing SARS. This is payable, it is output. Amount owed by, this is an asset. SARS is owing us, it is input tax. So you need to know the way they phrase, especially the opening balance. Now, transactions will not give us the VAT. Some transactions will, but not all of them will give us the VAT amount that is required. You need to calculate. For you to calculate, you need to know the definition of price exclusive, price inclusive. Then we use now the VAT formula to calculate the amount of VAT, because when we are talking of input or output, we are referring to only the VAT amount, not the selling price exclusive of VAT or the selling price inclusive of VAT. So I have designed a framework where we indicate that naturally price exclusive, this is price before VAT is added, is always represented by 100. Our current rate for VAT is 15%. Then price inclusive, selling price after adding VAT, it will be represented by 115. We are going to use this to form our VAT formula. So whenever you are given a transaction, you need to ask yourself, is it price exclusive? Is it price inclusive? Because our formula says amount given in the transaction divide by what it represents on the framework, multiply by what is required from the framework, will give us the required amount. So if we are given 12,000 inclusive in a transaction, so amount given will be 12,000. What it represents, because it is inclusive, we divide by 115. Multiply by, what are we calculating? We are calculating VAT, so we multiply by 15. That is how we apply. We are all familiar by now the VAT formula. We have used it in quite a number of situations already. Now, there are three methods that we can use to calculate the amount payable or receivable. There are two which I call logical method, and the third one is the VAT control account. I'm going to demonstrate the logical method to calculate VAT payable or receivable. Now there are 4 transactions. Amount owed to SARS on 1 May 2017. Amount owed to SARS means this is a payable, this is output tax. So our opening balance is output. Transaction B, purchases and payments, VAT exclusive. So you need now to know this transaction is involving 880,000 and it is exclusive. So whenever we are calculating payable or receivable, we are calculating the VAT amount. So we go back to the formula: amount given 808,000 divided by 100. That is what it represents on the framework. Multiplied by the required on the framework, it is VAT represented by 15 to give us 132,000, which is input increasing. Transaction C, cash and credit sales, VAT inclusive, 931,500. Because they are cash and credit sales, VAT on sales, it is output. Then we don't know how much is the VAT. So we are going to say amount given 931,500 divided by what it represents. This is inclusive, divided by 115 multiplied by 15. It will give us 121,500. This is output increasing. Then the last one, VAT on discount allowed to debtors, 4,560. We are already given, amount given is already VAT. We are to calculate VAT. So we could say 4,560 divided by 50 times 15. It remains 4,560. So we use VAT to do our calculation of payable or receivable. This is output decreasing. So the first method, previously we have shown you transactions which increase or decrease input, transaction which increase or decrease output. So for this transaction, you first calculate your total input. We have 74,800 plus 121,500 minus 4,560. Then you also calculate separately your total input. In this case, it is only 132,000. Then amount payable to SARS. Our formula says total output minus total input. If output is more than input, it means payable. If total output is less than input, it means receivable. So in this case, output was more than input. The difference is 59,740 payable. So this is the first logical method. You can present your calculations separately, your total output minus your total input, to give you amount to be paid over or received from SARS. The second one, you choose a line. In this case, I have said payables are increasing. Anything that increase my output will increase what must be paid over to SARS. Anything that increase my input will decrease what is paid over to SARS. So my starting point, so you need to know which one must be negative, which one must be positive. In this case, anything that increase output and decrease input, they increase payable. Anything that increase input and decrease output will decrease payable. So my payable is going to be positive. So it's plus 74,800 minus 132,000 plus 121,500 minus 4,560 is equal to 59,740. This is a payable. I call this logical method. As you do questions, you will get to understand it better. Now, the VAT control, we are combining now a ledger account of both input and output tax. VAT control account can be an asset, can be a liability, depending on which balance it is. So you have seen my pages moved down, but a credit balance means a liability, the business is owing SARS. A debit balance means an asset, SARS is owing the business. So on the debit side, we record any transaction which increase input and decrease output. I have used different colors. The ones which are in yellow, they are increasing input. The green ones are decreasing output, but they are both on the debit. Then on the credit side, anything that increases output will be on the credit, and anything that decreases input will be on the credit side. So I have also, anything to do with output is green, that is increasing, and the ones which are decreasing input are in yellow. When we balance this account, the type of balance will tell us whether it is a liability or an asset. A liability means payable, an asset means receivable. Amount owed by at the beginning, that is, we input, it is on the debit side. Cash purchases, the details, I have highlighted the details. So sometimes the VAT control, you need to know the details, but also I've indicated the journal. You will read on page 413. It can guide you on this account. We have discussed the transactions. What is required of us is how to present it as we are answering. Some transactions can be combined, especially if they are from the same journal. We combine them. The drawings, discounts, reversed on dishonored check, they are all both from general journal. We can just write one account, one transaction, general journal. Here I've separated to make it much clearer to us. Now it is time to do a question. When you are doing the VAT control, you need not to write details, because unless the question says prepare a VAT control which is detailed. If the question simply says calculate amount payable or receivable from sales, you just do your T account. On the debit, you have to record anything that increase input and decrease output. On the credit, anything that increase output and decrease input. So I have given my question on this side, then the answer on the other side. We have information excluding VAT, including VAT, and the VAT amount. Cash purchases of stock. We do not have opening balance, but every time remember of the opening balance, whether it is an output or input. Cash purchases of stock, it means we paid VAT 264. Input is increasing, so the 264 I record on the debit. Equipment purchased by check, the VAT amount is 6,000. Also input increasing, I write on the debit. Cash and credit sales, this is output, I record on the credit side. Debtors allowance, customers have returned, output decreasing, I record on the debit. It decreases payable. Discount allowed 600, it decreases output, I record on the debit the 600. Drawings of stock 3,600. Drawings decreases input, so I record the drawings on the credit side. Bad debts 3,000. Bad debts decreases output, the 3,000 on the debit. Bad debts recovered, this increases now. We are cancelling an entry which we initially recorded, so we record the one on the credit side. Then we total. Our bigger or grand total is 208,800. Our debit side is bigger, so we write the bigger total on both sides. Now the side with the smaller total, the difference is 155,565. So this will be our carried down, then our brought down will be on the opposite side. The brought down is the one which determines the balance. So in this case, this is a debit balance of 155,565. A debit balance, it means receivable, a credit balance means payable. So you don't need to write details, you just write VAT control, then you write your answers if the question requires only a payable or a receivable. You choose which one you prefer and perfect. But as we are answering questions, you are going to do both the logical and the control, then you decide. So for now we are doing both, then you tell which one best suits you, then you capitalize on your best. Our task and activities, we are going to do task 12.1 just to check our understanding of concepts, page 406. Task 12.5, the VAT control details, page 114 with the details. So we want to practice. Use the VAT amounts that were given, whether they were calculated using 14%, use the question has all the VAT for you. Task 12.13, we want to check our understanding of theory on VAT, page 422. Then task 12.14 to check on ethics, page 426. And good luck on the topic. It is a topic which is not much, but you need these marks.